I'm going to go to the theme last week and right into this week, which is the idea, Chris, of at some point international and emerging market investments, they've not moved like U.S. domestic. When do they start moving, or is it forever dead money?
Well, there is obviously a big valuation gap between the United States and most international markets, including Europe. So, yeah, we saw the beginnings of a rotation in September, early September, move to value. You could see the same thing with regard to international markets.
Is it just clearing the news flow? I mean, is it literally just getting some of these ginormous news items out of the way?
Yeah, I'm not sure. I'm not hopeful that that will happen anytime soon, but certainly a China trade deal would help everybody.
I mean, they would, but it looks unlikely that we'll get a China trade deal. If we stay in the status quo, Chris, what does it mean for markets?
So the markets, I think, are pretty realistic with regard to a trade deal not happening, and the odds going down, especially as the impeachment noise continues and heats up. So, small deal, big deal. I don't think we're getting a big deal. Maybe there's a chance for a small deal next year.
Okay, what does it mean for the consumer? So we had, I would say, diverging jobs reports, right, and kind of private hiring and things like that. What kind of U.S. economy are we looking at?
Yeah, the data has been mixed, interestingly. The consumer has hung in there, consumer confidence near all-time highs. But clearly the industrial economy around the world, and particularly in the U.S., appears to be turning over. So, is this going to be a repeat of what we saw in 2015, 2016, where the industrial economy sort of rolled over, led by oil, but the consumer helped the economy get through it? Or is this going to be something different? I think it's a little early to tell. I think we avoid a recession before the next election, personally.